some news from the FOMC meeting in the US. So investors are holding out with that. Do you really think we're going to see something different? We know that they keep saying that interest rates will be kept unchanged for an extended period of time, but it'll be interesting to see if we hear any news about quantitative easing.
Yeah, exactly, and good evening to you. For me, it all depends on the rhetoric that comes out. You know, what do you read about in the small print? We know it's going to be unchanged, the market's pricing and no change at all. But each sort of month and each sort of time that progresses and moves on, you know, the closer you get to some stage, that interest rates are going to have to start moving upwards, and you can't keep interest rates at zero forever. So I think certainly this time around it'll be dissected by all the traders and investors, and any single hint of withdrawing the stimulus, as you said, quantitative easing changing, perhaps looking at raising interest rates, or any sort of wording on inflation, I think will be jumped on pretty quickly. So I think it's quite a key decision tonight.
Do you think that the latest data perhaps warrants some kind of pullback in stimulus?
It's certainly moving in the right direction. I mean, everything that's been coming out, the ISM manufacturing numbers, I mean, the fastest growth in decades. We're seeing new home sales coming out better. We're certainly seeing unemployment back below the 10%. So from a US point of view, it seems like most of the indicators, backward looking and forward leading indicators, seem to have bottomed out. So at some stage, there's clearly something that the Federal Reserve is worried about, because on the face of it, interest rates should be going up a lot sooner. But there's obviously something in the background, and traders are still a little bit cautious.
Looking at South Africa, we've had relatively low volumes, and we've also had a lackluster day today after end of the day in the negative yesterday. But on Friday we were up 1.25%. But do you think we're really moving in tandem with what we've been seeing globally? We're
completely driven by what's happening across the pond at the moment. You know, it's classic after earnings report sort of lull. Volume's very low today. I think by 4 o'clock we're sitting at about 5 billion shares, typically trading 8 to 9 usually. So very, very quiet volumes, and you know, we seem to be in that sort of stage now when what takes us to the next level. You know, you have some of these retailers up 100% in a year. They've doubled. Some of the banks have more than doubled. We need to take it to another level, and it's scratching around trying to find what gets us up to the next leg.
Well, do you think perhaps the investors are waiting for a bit of a correction before they jump in? Because I mean, some people are anticipating a correction, and they're saying, well, don't buy at these levels, let's wait for a little bit of a pullback. Or do you think that's highly unlikely?
Well, unfortunately, when everyone waits for a correction, it's not going to happen, because typically most people are sitting short, and until they start covering, we're not going to go back down again. So there's no doubt about it, some sort of consolidation is needed, if we're not seeing it already happening at the moment. In the last week, we're sitting at pretty much exactly the same level the all share was last week, sort of a week and a half ago. So we are heading towards some form of consolidation, but I think if people wait for this infamous correction, they might be disappointed.
Are you waiting?
Bated breath.
Right, results out from building materials retailer Cashbuild show a 9% rise in revenue for the 6 months to December. Headline earnings per share were down 27% as profit margins came under pressure. Earlier, CNBC Africa's Stephen Gunyon spoke to Cashbuild CEO Pat Goldrick about the numbers.
During the reporting period, we believe that most of this has come from a very tough market. If you take Cashbuild's growth over the last 6 months, it's been 9%, but if you take it over the last 5 years, it's something in the region of 21%. In the 9 weeks since the ending of the financial year, we've seen our growth cut down to 6%. And we've seen it's getting tougher. The market is tough out there, and the reason for that is there's been the average transaction. Our transactions, that's the number of customers shopping in our stores for the same 6 months. They were about 7.2 million customers. That's 13% up on the same in the same period of last year, and we expect to have about 15 million customers shopping with us. But the average purchase has dropped. Now that's two things. That's because the building industry has slowed down, which we believe is temporary, but there's also been deflation. Steel has come down in price, cement hasn't grown in price, it's static, timber has come down in price, and a lot of other products has come down in price. So we passed that.
So your prices have come down?
Our prices have come down, and that there is deflation.
It's not often you hear that, is it?
No, it's good news for the consumer.
Well, of course, I mean, you have continued to open up new shops, though. 18 stores opened since July 2008, but during the period under review, 5 new stores opened and 4 refurbished. I mean, will you be continuing to roll out stores despite the environment at the moment?
Oh, yes. We will open, we've planned, we believe, a minimum of 3 stores open up now in the next 3 to 4 months. We'll refurbish approximately about another 8. We've got anything up to 40 stores in the pipeline at different stages. We always plan to open in around plus or minus 10 stores per annum. As you said, 18 stores over the last 18 months, and we will continue with that. We're not going to stop investing.
Where are you aiming those stores at?
It's still in the rural areas. That is where most of the people live. That's where the housing is needed, and in the townships in and around the urban areas as well. But it's mostly the stores are needed in where the masses of people live, and that's where we're placing our stores.
Well, just looking at some more of the numbers, cash flow is strong. It's improved. Cash and cash equivalents up 9%. Your stock levels also down 9% to 68 days of stock holding. Is this due to seasonal factors? Is this a concerted effort to bring those stock levels down?
No, there was about 12 months ago. We had a lot of stock. We bought in steel when there was a shortage of steel. We paid the high price first. Steel dropped in price since, and that affected our margin. Also, with the lack of demand, we're finding that our suppliers are able to deliver quicker and deliver on time. We also find that because Cashbuild is a listed company, has got lots of cash, suppliers are prepared to invest with their stock in Cashbuild rather than take a risk and not getting paid elsewhere. And we're managing our business smarter, but there hasn't been anything conscious about cutting back stock. It's just circumstances and the reduction. We have no longer had a buy-in of steel to meet our demand like we did 12 months ago.
And when would you expect your profit margins to start improving, or do you think they are at more normal levels where they are at the moment?
Well, in retailing, you always get some profit margins due to inflation. Inflation is ideal for the consumer at the moment. I think the margins are under pressure. We wouldn't want to see them go any lower. We expect them to not to go any lower. They may improve slightly, but not in the significant future.
Nick, let's get your view on Cashbuild. Headline earnings per share down 27%, dividend down 26%. A company that was viewed as a little defensive during the tough times because it catered sort of for the lower end, and there were still people going out and buying the bricks and buying the cement from the likes of Cashbuild. So a company that's now under pressure.
Yeah, under quite a bit of pressure. And I think quite disappointing as well to certainly see that even though revenues were up, that the profits were down, and obviously margins getting squeezed considerably at the lower end of the spectrum. As cyclical stock, and as you said, it used to be quite a defensive play. I mean, that idea has been, stock has done nothing. It's been sitting between 70 and 75 for about 5 months now. So, I just thought, again, it's struggling to find its feet. It was a product of the whole listing boom, along with the other sort of back in the 08s with the brick cores and that sort of the world. So I don't know what's going to accelerate it, because if it hasn't run and it hasn't had a decent jump in earnings like we've seen, certainly all the other companies in the last earnings season come out with huge jumps, up 110%, some of them. To see these earnings not really taking a big jump too, I don't think a stock's going to go anywhere in a hurry.
What about the overall construction sector? There is this notion that we're going to be seeing less spend going forward because after the 2010 Soccer World Cup, things are going to slow down. But then some say the 850 billion rand earmarked for infrastructure spend in South Africa is going to boost the construction sector. Others say that we shouldn't be too hopeful because only 20% of that amount is actually going to be directly impacting the construction sector. So, I mean, how do you play construction stocks up right now? Confusing. The construction sector, I think the problem that they've got is the transparency or the visibility, certainly looking forward. The market is trying to look forward to sort of FY sort of 11 and 12 even, and the visibility is just not there. I mean, the likes of Murray and Roberts certainly trading in the 30s for as long as I can remember. After 210, I think a lot of the order books have been not looking great, and on top of that, what particularly happens with the likes of Murray and Roberts got caught up in the whole Dubai debacle. Their order book was completely blown up in the Middle East there as well. So I think they're coming from a very, very tough, probably the toughest trading period they've ever been in. And I don't think until we get more visibility looking forward that these stocks are going to surprise to the upside in a hurry. We also had a bit of a trading update from PPC today. They say capex will be seen at 850 to 950 million rand, and they've also said that they've supplied to date 70,000 tons of cement to Eskom's Medupi power station project. We also know that the cement industry is, of course, under the spotlight in terms of the Competition Commission. So a PPC and the likes, what do you think of that?
Yes, it's another one as well that's really hasn't done a great deal, and typically when it certainly looks like the tribunal are going after everyone. I mean, they're going after at the moment, the Pioneer Foods, they're going after PPC. So I'd tend to stay away from that stock until there's more clarity from the Competition Tribunal.